So I'm going to review now the covered calls, the advanced charting, and the credit spread techniques that we teach here at Compound Stock Earnings. But I'll talk about the covered calls. The covered calls are the basic foundation of all the Compound Stock Earnings techniques. Covered calls were originally developed by Joseph Hooper over 30 years ago. He was doing investing with covered calls before all the online brokers. In fact, his father was investing in covered calls even for many years before that. So Joe learned from his dad and then took it to another level. Now Joe's been teaching others how to do that technique now over the past 15 years. A covered call is the most conservative thing you can do in the stock market. Now, when I talk about a covered call trade, that's where an investor buys a stock and then sells an option against that stock position. So buy the stock and then you're selling to a speculator the right to buy the stock back from you over a set period of time for an agreed upon price that you set right up front. And that speculator is going to pay you cash right up front for that right. That's cash for you to keep. No matter what happens to the stock, you keep that cash. You're basically renting out your stocks on a month-to-month basis. It's the most conservative and consistent of all the compound stock earnings techniques. It's the bedrock, the foundation. The most conservative of all the techniques is the covered call. Now, with the covered call platinum selection service, and that's the service where you receive emails of positions that I find to put in my own portfolio. I send out an email alert that not only comes through email, but it also is sent via smartphone, which arrives pretty quickly. But as I find a position, I send out that says, this is a position I'm getting ready to place an order for. And then I place the order, and then I send another alert out after that order has been filled to say exactly what the details were, how much was paid for the stock, how much was received for which option. And I'll follow up alerts of anything that's required after that. Those positions that I've sent out now over three plus years, started in June of 2011, that portfolio generates 3% or more per month, average about 3.2% a month after month after month. For the entire year of 2013, that portfolio generated 40.2%. Not too bad. The entire year of last year, 2014, that portfolio generated 50.7%, 50.7% return for the entire year on the entire portfolio. That's the power of 3% a month. The covered call techniques are supported by very sophisticated online tools that have been developed by Compound Stock Earnings. Here's pictures of 4 of those online automated tools. There's many more available than this in the actual, what we call the toolbox. But when you're doing a covered call, as I said, the whole risk is owning the stock. So it's important that you have a good, solid, quality company of the stock that you're investing in. So the tool in the upper left-hand corner is called the covered call screener. So it takes selected fundamental and technical criteria and runs all of the available stocks out there in the market through that screener. It screens for such things as earnings per share growth, therefore earnings per share, price earnings ratio, market capitalization, where the stock is trading in its 52-week trading range, what types of broker recommendations are there, and many other criteria. And the stock in the company must first meet those hurdles in order to be eligible to be in the screener. Then, after it meets those criteria, the screener looks at the premium that's available for selling a covered call. And it then has to equal 4% or more per month return, or the stock won't qualify to show up in the screener. Once it passes that criteria, then it's presented in the screener. And it gives you multiple different selections. And I read across the first one, it says CRUS. So it gives the stock's symbol and then the name of the company, in this case, Cirrus Logic, what the current trading price is for that stock, because that's what you would buy the stock at And then it tells you what option to sell. It's a near month in the money option. Now you'll learn about what these terminology means and how the technique works. You learn about that in the 2-day Fast Start seminar. So you may not understand it tonight, but that's okay because you'll pick it up really fast at the 2-day Fast Start seminar. So it tells you in this case, you sell the March 26 call and receive $3.20 per share of cash immediately into your account once you sell that call. That's over an 11% return if you're not called out, and 3.4% return for the month if you are called out. It also provides a little thumbnail sketch of the cycle of that stock, because not only does it have to meet all the criteria and have the appropriate amount of monthly income available on it, it also needs to be in a rising cycle. So we look at the chart before we make our final determination. Now we teach you how to do that and show you in action in the Covered Call Platinum service. Now, the other tools are there to support the management techniques. And management is what we call the process of generating income in the subsequent months after the first month, so that you can continually generate the income on that stock, whether it goes up or down. So we have management tools, 3 of which are presented here. They're online and automated to help you make the decision of what is the call to sell for the next month and each month after that. That's what allows cash flow generation, whether the stock goes up or down. Again, we cover this in the Fast Start seminar, as well as supported by the Covered Call Platinum service, where you see them live in action on a weekly basis. So it all begins with the 2-day Fast Start seminar. And that seminar comes with a 100% money back guarantee. You have absolutely no money to risk whatsoever. In that seminar, we teach the basics of covered calls, advanced charting, and credit spreads. Then, after the seminar, you receive a 30-day complimentary subscription to the Covered Call Platinum Selection Service so that you can learn the basic foundation, bedrock of the techniques, as well as understanding the options trading process. Again, that Covered Call Platinum service, the selected trades that are sent out via email and smartphone, they've averaged over 3% a month over the 36 plus months now, 36 and a half going on 36 and a half, 3.5 years going on 4. So if you want to learn covered calls, if you have existing stocks, or if you just simply want to invest in stocks in the market, that's what the covered call technique is for. And starting with the covered call technique, you learn the basics of options trading. And in that Platinum service, the clients can mirror each of the trades that are sent out, place them in your own account. We suggest that you start with a virtual trading account as you learn the technique. And you get to attend the weekly 2-hour Covered Call Platinum Selections coaching webinar. That provides you the ability to ask questions, gives you the opportunity to ask questions so that you can fully understand the techniques that you're learning. Now, it's just not good enough to come to the seminar and expect to absorb all of that information and then be out trading on your own the very next day. The success of compound stock earnings is based on the follow-up training. Things like the Covered Call Platinum Selections service, where you get follow-up coaching 2 hours per week. And that is recorded while it's being conducted so that you can review it many times over, as well as if you're not available to attend live while it's being conducted, then you can watch the recording at your own leisure. Steve asks, what's the difference between the Fast Track seminar and the original Covered Calls 2-day seminar that my friend went to? I'll get to that when I talk about the Platinum services, Steve. So I'll hang on to this question and we'll cover that a little bit more in depth as we go through so you can understand what the Platinum service is. Now I'm going to cover the advanced charting techniques. Now, advanced charting is a much more advanced technique. And advanced charting program itself really revolutionized everything we do at Compound Stock Earnings, because advanced charting is revolutionary charting per package. It's proprietary to Compound Stock Earnings. But advanced charting allows you to understand with very good accuracy what the stock may do over the next few days. Because you can predict with incredible accuracy that short-term future price direction of the stock, that allows short-term option trades to be implemented. It is the most accurate and predictive charting method that's ever been made publicly available. And with our new intraday streaming charts, you can get all the way down to day trading, which we call trade the moment. Now, the Advanced Charting Platinum Selections is the highest returning of all the compound stock earnings techniques. Generates up to 5% per day with that trade the moment technique. Again, these are very short-term option trades all the way down to just daily option trades with the trade the moment. Now, Compound Stock Earnings has been developing the advanced charting program for over 7 years and spent millions and millions of dollars and invested in thousands of hours of development to get it to this point. And it's been used successfully for multiple years since its first introduction back in 2008. Now, here is a picture of the two advanced charting programs that I've mentioned so far. The one on the left is the original daily advanced charting program. The one on the right is what we call the intraday streaming chart. So I'll start with the one on the left. We call it the daily advanced chart because this is the one that provides an understanding of the probability of the stock direction over the next few days. So here we can see that this is Apple. It's a chart of over a year ago. It's not the current chart. The current chart looks like the total opposite of this one. But you can see that it's been going down for quite some time. Now, this might look confusing at first, but we explain the rule-based method of how to read all of those lines in a step-by-step process to where you'll learn to the point that you can look at this in 30 seconds, determine, is this going to keep going in the same direction or is it about ready to change directions? And that's the key, is finding that time where it's ready to change direction and then looking for what we call the sweet spot, that entry right at the time that it's changing direction so you can buy that option and then sell it for a profit in a few days. And here we see actually here with this Apple chart that it had been going down for many months, but it's just getting ready to change direction and start a new rising cycle. It's within probably 1 day of doing that based on reading this chart. Now, if you've seen the Compound Stock Earnings Cow Report, that's a weekly kind of newsletter that Joe Hooper develops, and it's free. You can sign up for it on our website. But included in there is all of the emails that clients send in each week. So you'll see from hundreds of clients that are making these kinds of returns, that have mastered advanced charting. Now, the chart on the left, as I said, is the daily advanced chart. We use that to do what's called momentum trading. And that's simply buying an option and waiting for it to go up in value and selling it for a profit. Now, the record of momentum trading up to this point is 196 straight profitable trades. Greg in Texas has accomplished that. Now, we have a couple other people that are on their way and have reached over 150 successful profitable trades without having a loss yet. And as I said, we teach you the rule-based method on how to read that chart line by line by line. Now, the chart on the right is what we call the intraday streaming chart, because that's just streaming data. This chart is actually 3 separate charts just sitting side by side. They're just placed real close together so they fit on this slide. But it actually comes with 3 separate charts where you can actually watch 3 different equities or just various time periods on the same equity. We teach you how to read these intraday streaming charts where the data just streams and it just keeps plotting on your computer screen, just moment by moment by moment. This is what provides the ability to have a very good understanding of what this stock is going to do over the next 10 minutes. Now, the majority of folks that are using this intraday streaming charts, we call it the ICE charts, they're trading the technique called trade the moment. And they're completing 1 to 3 days, 1 to 3 trades per day. The majority of it is done in the first 2 hours of the market. They're trading the moment, in and out of positions within minutes, and back to cash at the end of every day. So it doesn't matter what happens to the market overnight. and a lot does happen to the market overnight, because you just simply start all over again the following day. And with those advanced charting techniques, if you decide that you want to spend the appropriate amount of time each day doing day trading with Trade the Moment, you can produce returns of up to 5% a day. As I said, we teach you to select that perfect sweet spot on those advanced charts. And we provide a daily watch list. That's a list of about 100 stocks that are sent out every week that are candidates for those sweet spots. And you get to attend the Advanced Charting Platinum Selection Service webinar. Again, another 2-hour webinar that not only reviews and coaches more on the technique, but also provides the opportunity for you to ask questions to fully round out your understanding of those techniques. Now, with the Advanced Charting Platinum Service, there's not only one 2-hour webinar each week, there's actually three separate 2-hour webinars each week that provide additional coaching and training in addition to reviewing of the questions. And those are all recorded then so that you could even view them at a later time, whether you're attending live or whether you can't attend the live presentation at all. Okay, so I've talked about the most conservative of techniques. That's the covered call. And I talked about the most aggressive of the techniques. That's advanced charting. Now I'm going to talk about one that's kind of in the middle of the road of those two techniques. It's called credit spreads. Option contracts are not just monthly anymore. Option contracts used to just be monthly expiration. A few years ago, weekly option contracts were introduced, and those are contracts that expire every week, options that expire every week, and that provides even greater profit opportunities. So to go along with that advent of construction from the Chicago Board of Options Exchange, when they started offering weekly option contracts, then Compound Stock Earnings developed the weekly credit spread technique. The credit spread technique leverages rapid time decay in the weekly option contracts. Again, you may not understand this terminology, but you will after the 2-day Fast Start seminar, because that's where we teach the basics of covered calls, advanced charting, and credit spreads. But suffice to say that an option has a life cycle. It only lasts till expiration. So the closer you get to expiration, the less that option is worth. The value goes down when there's less and less time left in the contract. So the weekly credit spread technique leverages that rapid time decay in those weekly option contracts. So these positions, you're only in for a week or less. This is an ideal technique for very conservative investors, because this technique teaches to only use 25% of your portfolio and leave the other 75% in cash. Now, not only do we teach the technique, but it relies heavily on the interpretation of our advanced charting program. So you follow the rules. All of these techniques are rule-based. We teach you the step-by-step process and the rules to follow. And you follow those rules in addition to interpreting the advanced charting program to determine when is the appropriate entry and exit time. And in the weekly credit spread platinum selection service, that's where there's 1 to 3 trades a week that are sent out via that email alert. It averages around 2.7% per week. So if you're someone that has a good, solid nest egg and doesn't have much time to invest, but still wants incredible returns, the weekly credit spread technique could be for you. Now, in the toolbox, there are tools that support the credit spread technique as well. Here's a couple of those tools. The one on the left is a credit spread screener. Now, credit spreads can be performed on indexes, on ETFs, on stocks. We have a screener for each of those. This one happens to be the index credit spread screener. And what a credit spread actually is you're buying one stock, you're buying an option and selling another option against it. It doesn't involve buying any stock. Now, you can do the credit spread on a stock, but you're simply buy an option and sell another option against it, and those options both have the same expiration period. So in this case, we look at the first line under the call spreads. Now, credit spreads can be performed either with calls or with puts or with both. The first line says NDX, which is the NASDAQ 100 index. And it says what value that index was trading at that moment that you hit search on the screener. It was at 27.31. So it says based on that value, the spread that would be selected is to buy, that's what the long option is, it's buying the option, the 29.25 option for $2.35 in premium per share. And then at the same time, you're selling an option against that one, the same expiration, and the 28.85 strike for $4.30. So there's where the credit comes in. You spend $2.35, you receive $4.30, that's $1.95 per share credit, which is almost a 5% return for that week. Now, in addition to the screener, then we have the chart on the right that includes our probability chart. So we teach you how to read the probability chart, and part of the selection criteria is that the probability of success is at least 85% on a position that's selected. So in this case, as long as this index stays below the 28.85 level, and you can see it's currently trading at 27.31, if it stays below the 28.85 level, then the entire credit is just kept, and you have your 5% return for the week. Now, if it starts approaching that level, we have management techniques that will go along to keep you from having the position reach that short call strike. And you'll learn about this technique and how to use it in the 2-day Fast Start seminar. So again, it all begins with the 2-day Fast Start seminar. That comes with a 100% money-back guarantee. We teach the basics of credit spreads, covered calls, and advanced charting. And then you receive a complimentary subscription to the Covered Call Platinum Selection Service. If after that complimentary subscription, you either decide to stay in the Covered Call Platinum service and learn in even more detail and in-depth the covered call techniques and trading with options using covered calls. If you decide to advance above that, and maybe credit spreads might be a technique that you want to learn, then you move on to the Credit Spread Platinum service. And in that Platinum service, you receive 1 to 3 emails a week. You actually receive a lot more emails than that, but the emails are on 1 to 3 actual positions using weekly credit spreads. In addition to those alerts where you see actual positions that Keith, who manages this Platinum service, that he's finding and placing in his own portfolio with his own cash, not only do you get those selections and all the follow-ups that go with it, that he tells you step by step exactly what he's doing with that position, you also get to attend the every week, weekly Credit Spread Platinum Selections webinar, where you not only get additional coaching and training, but it also provides the ability and the opportunity for you to ask questions so that you can fully understand the technique.